Good morning, everyone. At 8 a.m., time for Biz Talk. And we say this a lot, but today, boy, do we have a good guest. So we are anxious to get started. Let's go.
All right. Good morning, everyone.
Good morning.
Morning.
Hey, it's a great day today in the Fusion One Lounge. I'm Glenna Hum, and around the square here, we have our other marketing gurus. We have Kelsey. I almost said Munn, but Kelsey, I have to get used to that. And Sarah Gilliland.
Good morning.
And before we get started, Sarah, can we put up our broadcast?
Yes, I'd be happy to do that. Okay, don't forget, every single week we go live on Facebook, YouTube, and Twitter. And you want to make sure that you subscribe to our great podcast, Marketing and a Mic. And don't forget to follow us on Instagram and LinkedIn. And it's also important that you go ahead and subscribe to our YouTube channel. I'm telling you, every single week, and I mean it, every single week, we are putting out brand new videos, all in the name of marketing, all in the name of business, all good stuff. So you want to make sure you subscribe.
Yes, really good stuff. Okay. When we were meeting with our guests this week to do a little prep for the show, we just realized there was so much great information that everybody needed that we're going to do a two-part segment. Today, we are going to start off talking about basic mortgage information and what you can do for the people out there. So I want to welcome Scott Stearns from MortgageBanc.
Hey, ladies. Thank you. Thank you for having me.
Well, we are so excited to have you today because in today's world, the real estate market is nuts and crazy, and they need somebody to help guide them through this process. So we're so excited because you have info for everyone. So let's go ahead and just get started and tell us a little bit of overview of how you got in the industry.
I have been in the industry now for 19 years. Before the mortgage industry, I was actually a teller at the Birmingham Post Office Credit Union. So I started doing automobile loans, and I got into the loan process and how that works. And I started seeing that I could show people if they would do a little bit more, they could save this much interest on their loan. So the credit union didn't like that so much. So I was only there for about 3 years, and they caught on to that I was costing them money on interest. So I moved over to actually the Small Business Administration with the government, but I was on the home loan side instead of the business loan side. So we would come in when a tornado or a hurricane would destroy an area, and we would give low-cost mortgage loans to help people rebuild their home. At that time, our low-cost loan, the normal rate on a mortgage was about 9 or 10%, and our low-cost loan was 4% at that time, 25 years ago. Well, now in today's market, the mortgage rates can be below 3%. So we're even lower now than what the government provided loan was back then.
Well, and you have a lot of specialty areas. Tell us a little bit about those services and those specialty areas, or touch on those real quick.
So like I said, 19 years in the industry as what we call a forward mortgage, a regular mortgage like everybody is aware of when you buy a home or refinance a home. So 19 years serving families doing that. 10 years ago, I added my VA certification. So I'm a VA certified mortgage specialist. I did not get the privilege to serve. So this is my way to try to give back to some of those veterans and their families that have served our country and me indirectly. So 10 years serving the veterans. And then 4 years ago, I also added the reverse mortgage product. And that is for an individual that's 62 or older and still making a mortgage payment. So a lot of times that gets a kind of a negative rap, but HUD and FHA came into that program in 2013 and revamped the entire program. It's now fully insured by FHA, and people just don't know the new guidelines.
Which we'll help them with next time, won't we?
That's right. That's right. So,
Come back for part 2.
So that's what I do.
Perfect.
So there's a lot that you do differently that I think is what makes your service so exceptional. And out the gate, how you introduce yourself to clients, to new clients, is to me so valuable. The first piece is that you do the get to know Scott Stearns. And this is a real personal touch. And you had said that you put this as well into a video. Along with that, you had told us that, you know, a lot of times new clients are getting this itemized fee worksheet. They don't know what the heck it means. They don't know what all these numbers mean, and it's really overwhelming. So you have sort of, I think, a really nice personable approach to make that introduction and to go through that process and make it so much easier. And Kelsey actually has a video that you were kind enough to put together for us to give us a little sample of what you do.
Sure.
Hey, Fusion One team, Scott at MortgageBanc. Listen, we're going to go quickly so the video's not too long. This is what I told you. Instead of sending a spreadsheet with a bunch of numbers going everywhere, I send this video. It's a breakdown, and it's come in handy, especially during COVID, because we can't meet face-to-face. This is almost like meeting face-to-face. So this example is an FHA Ginnie Mae loan. We go direct to Ginnie Mae or Fannie Mae or Freddie Mac. So least amount of documentation and lowest rates available. This example is $300,000 purchase. FHA has a minimum down payment of $10,500, so you would finance $289,500. The total loan amount looks different, and that's because HUD automatically finances in a portion of the mortgage insurance. Put the minimum down payment instead of having to save up 20%. This is my estimate at this point. We don't have a property address, so this is my estimate for annual homeowners insurance premium. The escrow account, that's nothing more than a fancy word for a savings account at the mortgage company instead of your bank. So when you make your one payment each month, it covers your homeowners insurance, your taxes, your mortgage insurance, everything. So for example, $100 a month times 12 months in a year, that's $1,200. That's where that premium comes from. And then over here is the entire transaction, the purchase price, closing, taxes and insurance. That mortgage insurance is financed in, so we have to show it as a credit here. Otherwise, it will look like you owe this out of pocket, and you do not. And then your other credits come into play here. A credit for the loan amount. This represents the non-borrower or the seller paying their half of the attorney and title. If you put $1,000 earnest money on the contract, you get credit for that. And then in this example, the seller's paying $4,000 towards closing. So out of the $10,500 minimum down payment required, $10,500 of this is the down payment. So there's only a couple $100 over that would be due. So hope that makes sense. Have a great day.
That's awesome.
That
That is great. So that's a really good touch that you do at the beginning that kind of helps new clients digest everything.
Yes. Thank you, Sarah. And the number one response I get from that video is when I'm talking to a couple. One of them is at work. One of them is working from home during COVID. They're not together. They can't remember what I said. They don't know the terminology. They don't do this every day. National average, they do it once every 7 or 8 or 10 years. So the video, they come home, they sit down to dinner or whatever, they push play in 2 minutes, they're on the same page. And when you understand something, it takes that nervous edge away and you're like, okay, you know, we're not going to owe extra money. Here's the dollars. Here's exactly what it is. And it doesn't leave any room for misinterpretation.
It's huge.
That's exactly what I was going to say. If one spouse is working with you and the other one's not there, how am I supposed to be able to remember exactly what you told me about all of those numbers? So great idea.
It's a time saver. It's a time saver for me, and it's a time saver for them too. And when they can relax and understand the numbers, then they can go out looking for homes confidently, and they can relax now. So it can be fun like it's supposed to be buying a new house, not worried and stressed about the numbers.
Exactly. So along with your cost sheet, with those specific numbers, do you include anything else that would help them know their exact closing costs prior to going to the closing table?
So the video that you just played is basically, you would call that day one. When I do the pre-approval, I work up which program is best for them. Sometimes, most of the times, people are qualified for several different programs, and I'll show them different options. So just for the time's sake, I just showed you that one FHA option. And on that video, I noticed I said the minimum down payment for FHA is $10,500. That was the dollar amount. I should have said the minimum down payment for FHA is 3.5% of whatever the purchase price is. So in that case, it just happened to be $10,000. On a $100,000 house, it would only be $3,500. So 3.5% on that. So that's day one on the itemized cost sheet to let them know what everything looks like. So you saw on that video, I said, this is my estimate for homeowners insurance because we don't even have a property yet. The property taxes are tied to the home as well. So I have to estimate that. I try to find out what zip code they're in, and then I can kind of dial it in from over the years of experience to be $100 a month instead of $300 a month in another area for taxes. So that's the estimate. When we go through the whole process and we're getting ready for closing, 3 days prior to the closing, I send what's called a CD, a closing disclosure. So it's 5 pages long. So instead of sending them an email with a 5-page document for them to weed through, I make another video that's customized to the numbers that they're going to see when they're sitting in the room with the attorney and their real estate agent and the people they're buying the house from and me. I go to my closings. So before they get there, they've seen everything. They know exactly what the numbers look like. They know the address of the attorney's office that we're going to. They know how to wire their down payment money. Another thing that it started doing that I didn't realize is when we get to the closing, they say, "Oh yeah, I saw that on Scott's video," and the attorney looks and goes, "What video?" And so they say, "Yeah, we've seen all those numbers. That's exactly the amount that we wired, or here's the check for that exact amount." So then he doesn't have to go through that 5-page form line by line. So we're saving money at the closing. Time at the closing table, and they get their keys to their new house quicker.
Yeah, that's
awesome.
That's what it's all about. And it's like you said, it's stress-free, which
it is.
The money part is the worst part for everybody. So
that's when you sit down and you get to the amortization page and you look down at how much it's going to be after 30 years. And we're like, yeah, don't look at that page really fast. Too long. But it just makes it flow better. And a lot of people, that's available to anyone. A lot of people just don't take time to do it for their clients. For me, it's a little selfish. It's service first, but it's a little selfish. It saves me time too.
Sure. Well, it just makes you have more time for the important parts instead of getting in the nitty gritty. Right. So we have people tuning in this morning. We have Kirk Edmonds. We actually have Cindy Edmonds too. So we've got both of the Edmonds this morning. We have Melissa Dixon, Roxy Kelly, Gail Mason, Steve Johnson. Gail says, Scott, that is really awesome the way you do things. And then I have a lot that Melissa wants to say here, if we can pop that up. She says, we've worked with Scott twice. He's absolutely fantastic. His personal breakdown videos are so valuable for those of us who get confused easily. So then she has a question. Scott, how will the presidential election affect mortgage rates?
Ooh,
that's big. That's another segment.
So we'll do part 3 in 2 weeks.
Yeah, the interest rates kind of fluctuate based on how the debate goes.
Yeah, exactly. So in a presidential election year, what we have seen in my years, 19 years, what we have seen on those presidential election years, about a month before and a month after the election, the rates just really flatten out, and there's not a lot of up and down movement. in anticipation of who's going to take power.
Yeah.
This is whatever side of the fence you land on in this election. I think it's the most important one that we've ever had in history. So I would only be speculating, Melissa, if I said what the rates were going to do. However, I can say that the feds continually have given us correspondence through different subscriptions that I have, that to re-stimulate the economy out of COVID, out of 30 plus million people being out of work, they're going to do whatever it takes to keep the rates down on through at least the second and maybe into the third quarter of 2021.
Ooh, that's good news. That's
And
great.
that's independent of the election results.
Okay, fantastic.
Yeah.
I know I've heard you talk about Fairway, and obviously I know that you're with MortgageBanc. What is that relationship between Fairway and MortgageBanc?
Okay, good, great question. So we've known each other a lot of years,
Yeah.
and you knew MortgageBanc. A lot of people don't know MortgageBanc's name in the Birmingham market. And the funny thing is, we're the largest independent lender in the entire state, but we don't advertise. You don't see us on billboards. You don't see us on TV commercials. You don't hear us on the radio. With this kind of service and the system that we work in, we get our referrals from the real estate agents, the attorneys at the closing. With a rough closing, they'll pull the realtor aside and give them a MortgageBanc business card and say, "Hey, this never happens with MortgageBanc. If you keep running into this, you may want to work with somebody over there." So, so MortgageBanc had their name established in the Birmingham market for 20 years now. And then about 8 years ago, we saw the need that we needed to branch out and have kind of a big brother with us. So we started looking around. Fairway Independent Mortgage Corporation is in all 50 states. They're in excess of a $50 billion a year mortgage company. So that puts them in the top three with Quicken Loans and Wells Fargo on their mortgages. The funny thing is, MortgageBanc's the largest in the state. We have one office on 280, Highway 280 in Birmingham, with about 50 agents, 50 loan officers. We started branching out a couple of different places as well. But some of the other banks have a branch on every corner,
Yeah.
and we're outperforming them 2 and 3 and 4 and 5 to 1, just because we make our clients a family. We talk about them with their name, not their property address. So not their loan number. So Fairway came into play 8 years ago. They're our big brother, and they're the ones that give us direct access to Fannie Mae, Freddie Mac, FHA, VA, instead of, so we're a correspondent lender. We go direct to those entities. We don't have to go through another lender, kind of, or a middleman situation to get to the money that we need for our clients. So that saves time. That gives us lower interest rates, and that's less paperwork as well. So
Perfect.
MortgageBanc Fairway relationship is like that. A lot of people go, Fairway, is that like a golf company? And actually, the company was founded, they named it Fairway because they wanted to do business in this industry the fair way. Yeah.
Got it.
That's great.
Yeah.
All right, Sarah, let's talk about refi.
Yes. Okay. So you offer refinancing, but I want you to kind of tell us a little bit more about how it works and how things have changed a little bit now with the refinancing process since COVID-19 came into play, which we.
Okay. Yes. So we do a lot of refinancing. We're a purchase business first, because the purchase business is the true business in our industry. When someone needs to buy a house for their family, it doesn't matter what the interest rate is. When someone needs to refinance, the rate needs to probably be lower than what they already have.
It helps.
That sounds obvious, but sometimes that doesn't apply across the board, because sometimes they may be restructuring some things that saves them hundreds of dollars a month, and we could get the same rate, but we restructure some things, make it tax deductible, and they save $3 or $4 or $6 or $7 or $800 a month on their monthly cash flow. So what's happened just recently, Sarah, on the refinances from Fannie Mae and Freddie Mac, that's ultimately where the money comes from. The public cannot access that money from them. You have to go through a bank or a mortgage company or a credit union. So Fannie Mae and Freddie Mac lost billions and billions during COVID, during what you heard about forbearance and foreclosures, and then deferments of payments. There was a lot of uncertainty about what a deferment was and what a forbearance was during that time too. So they lost a lot of money during that time period. So what they've done recently is they've added 0.5% to the margin on refinance transactions only, not purchase, but refinance only. So that is impacting the interest rate that you can achieve on a refinance right now. They're still fantastic. But what we're seeing is a lot of our clients that just got caught in the middle of this. This is these loans have to be delivered before December the 1st. So even if we started today, we couldn't do everything and get it delivered to Fannie Mae by December the 1st. So we're already having to implement this into the new loans. So it's either 0.5% difference in the margin, which makes the rate higher, or what my clients have done, I've worked up the numbers and I can show them, okay, you can still get the lower rate, but it's going to cost you whatever, depending on their loan. It may cost you $800 in a discount point to keep that lower rate. Well, I divide that out and show them that in 16 months, the monthly savings compared to the $800 investment, you're going to recoup that in 16 months, and then you're to the good for then on out, and your interest savings is there. So the rule of thumb on that is you recoup your investment in 36 months or less. It makes financial sense to do that, to spend that money to buy the rate down.
That's a good point.
If not, it's not worth it. So that's kind of what's going on right now, and that's going to go forward. And they're trying to build up a reserve account for those billions and billions of dollars of losses that happened during COVID. COVID impacted everything we know in our life.
It really did. And surprisingly, the housing market has stayed on fire through all of this. I mean, there's multiple transactions on almost every house that's listed. And in a lot of occasions, within hours of a listing going active, there's offers already on the table. So what is your golden goose to help your clients put them in a position to where they may have an offer actually accepted and get the house that they want?
Okay, so it sounds like you're reading my mind because and that's kind of freaky, Kelsey. Thank you very much. But that is exactly what's going on. And you said, Glenn, a while ago that Cindy Edmonds was on the line. She's a fantastic real estate agent in this market. She can tell you that within hours there's an offer. There's multiple offers, and a lot of times right now, the offer is requiring what's called the highest and best offer because there's so many offers. So the most recent just crazy offer situation that I was involved in, I had a female FBI agent moving here from Pennsylvania. She was the one that did the lie detector test for the new recruits. So I figured out I don't want to play poker with her,
or lie to her.
And I was trying to not touch my face, not do my tails or whatever, which I don't lie anyway. But it was just funny. We had a good time. But the house she found had 22 offers on it.
Good gosh!
So this was the perfect, she had been looking around for a long time. She's moving here from Pennsylvania. So she really wanted this house. The price was right, everything. So we went up on the offer, but there were still 22 other offers. So what we did is we gathered her information up front. We gathered her tax returns, her pay stubs, her W-2s, her bank statement to show where her down payment was coming from, pay stubs, everything. And we issued a guaranteed closing approval letter. So I think I sent you a copy of that, but it's also in a brochure form as well. And it just says, we guarantee the closing. And if it doesn't close on time for any reason, if we missed something in the process, we'll make it right up to $7,500 by paying back the cost of the home inspection and the appraisal, paying temporary living expenses. So sometimes somebody has to sell a house and they're under contract and obligation to sell a home. And then if we weren't ready, we would put them up somewhere, temporary living expenses, and we'll reimburse the earnest money to both parties just because of the hassle, because we missed something.
Yeah.
We put our money where our mouth is. We issued this, the last 4 years, we've issued this over 1,000 times a year. We haven't paid it out once. And the question you have to ask is, if you're pre-approved somewhere and they won't guarantee your closing, why will they not guarantee your closing? All they have to do is gather your documents and know that it's going to close. So the only thing this does not apply to is what's called a USDA loan. It's a 100% loan with no down payment. When I first started doing USDA loans, my manager said, "Hey, this is a good loan for first-time homebuyers. You really need to study this and get to know it." And I was like, USDA? I thought that was the good meat at Winn-Dixie. and he said, "Yes, it's the same. It's the same people, but this is the mortgage division." So, it doesn't apply to USDA, and the only reason is USDA is a government entity, and they control when they release the money for that program. So if we don't have control of that piece, we can't guarantee that. So in that 22 offer situation for the FBI agent, she won the bid with a lower offer than one of the other offers because she was guaranteed to close, and the other one was just a black and white sheet of paper pre-approval letter.
Wow.
So we're winning deals for our clients and our realtor partners by guaranteeing the closing. And again, I say, if you're already pre-approved and your lender won't guarantee, you to say, "Do you guarantee that this will close?" and they can't guarantee that, you need to call me.
Yeah. That's a good tip. That's a very good tip.
Exactly.
We have some more tips for people too that we want to ask you about. I know you've seen everything in the industry. I mean, you've been in it 19 years, but what are some of the tips you can share with homeowners when they're purchasing a new home? Maybe a couple things that you run into all the time.
So the number one thing I run into, and it's just a sign of our technology age. People sit in their comfy chair, or they prop up in the bed with their tablet, and they get on the internet and they look at houses, and they look at cars that way too now. But they find the house that they fall in love with. They call the real estate agent. They want to go look at it, and they've never even been pre-approved for a loan. They don't have a budget. They don't even know if they can afford that home. They get their heart involved in looking at that home and want to go see it. So now what's happened with these multiple offer situations, the listing agent that's going to show them the home won't even let them make an appointment if they haven't already been pre-approved. So it's always felt to me like the public did this transaction backwards. Mm-hmm. They find the house first, and then they come and find out if they can qualify for it or not. So I would say apply first and get your budget together. The scary thing is most people don't have a budget at all.
Yeah.
I'm talking about a written down budget to know what their bills are. The money comes in, they write their bills, and whatever's left they spend. So do your application first, because another thing is we constantly find things on people's credit report, not to scare anyone, but we find something on people's credit report that they didn't even know was there, that the creditor never called them. They just report it to the credit bureau. And so when we do that first, it gives us time to make those adjustments and get the credit score as high as it can be, which in turn equals the lowest interest rate that you can qualify for. So I just really encourage, call your mortgage lender first, get pre-approved. And then we've worked with all the best real estate agents over all these years. So depending on what area of town you're working in, we can refer you out to the best. And if you already know someone, that's perfectly fine. We'll work with anyone. But it calms down the situation if you get pre-approved first. You know exactly what your numbers are going to be. One of the biggest shock factors is when somebody goes to a new construction development and the taxes are double the first year because it's never been homesteaded.
Yeah.
So they're thinking on these online calculators that the payment's going to be this, and it could be $100 more, it could be $200 or $300 more the first year until their homestead exemption kicks in.
So save yourself some heartache. Get pre-approved.
Yeah. Be prepared. Okay, so let's talk more about tips when it comes to your credit score and credit repair, because this is a really good one, but we want to make sure that we cover. Okay, so you mentioned that the credit score systems out there like Credit Karma, they're not kind of common sense like people would think that they are. So no. I kind of want to give you I want to ask you a two-part question here. So what do you mean by that with kind of going online and looking at your credit score and how that's not necessarily what you should go off of? And then additionally, do you have tools that could help somebody if they do have bad credit, so that they're not afraid that, okay, it's donezo for me, to help them get in the right way where they can qualify for a home?
Right. Okay, good. And I like Dunzo. I'm gonna use that from now on.
Dunzo?
Yes. We're just Dunzo. So perfect question for Credit Karma. A lot of people look at Credit Karma these days. Credit Karma does a lot of advertising, so they're well known. What people do not realize is that Credit Karma is not a lender. Credit Karma is a monitoring service. So if for example, before COVID, people would come into my office and they would show me their phone and they say, here's my credit score right here. Why are you giving me a lower credit score on the mortgage report? And so I have to explain to them that the Credit Karma is a monitoring service, and that score may only be reflecting one bureau, maybe Experian only, if you're looking at a car loan. Even if it did show all three scores, Credit Karma not being a lender, their score is to show you if someone has stolen your identity, or if what your balances are. If you're working on paying some things down, it helps you keep up with what your balances are. But Credit Karma is not making a lending decision to give you hundreds of thousands of dollars to buy a home. So the scores are completely different. And that the credit score model, it's just an algorithm in a computer system. It's not the Wizard of Oz behind the curtain passing judgment on people, so it's weighed out differently. So when you're looking at your credit score, like you said, a lot of times it's not common sense. People don't realize if they don't do this every day. 35% of your total score is made up of just, do you make your payments on time or not? Mm-hmm. So and they look at the last 12 months of what is the activity the last 12 months. You could make on-time payments for 10 years and miss a payment this year. And this year is what's happening now when you're trying to borrow money, not what happened 10 years ago. Mm-hmm. Another 30% of your score is made up of how much is your balance compared to the limit. So if the balance and the limit are like this and you're maxed out, you can make all your payments on time and your score be bad.
Yeah.
Because you're maxed out. So in the algorithm, it shows they're not utilizing credit properly. So that affects the score, runs up a red flag and says, okay, if they're spending all this interest on a credit card at 18 or 20% or whatever, I guess in a way it's saying they're spending more money than they make.
Yeah.
Because why would you do that? Why would you pay extra interest on that if you did not have a budget, were not disciplined, and you're paying more interest on money like that? So you can even make on-time payments and have maxed out accounts and have a bad credit score. So the guideline on that is your balance to limit ratio needs to be 35% or below. So for easy math, if you have $1,000 credit limit on a credit card, don't run that balance up over $350. After that 35% threshold is eclipsed, then the algorithm starts grading that as a maxed out account, and your score starts going down.
Yeah, good tip. Really good tip.
And then if you use credit is supposed to be for convenience, not for debt. So making a plane reservation, making a car reservation, ordering online or whatever, use it that way for convenience. And then when the bill comes in, pay it off. And then you use it for convenience and you never paid a dime in interest.
Got it.
Perfect.
Perfect. All right. So we get through all of this stuff, and then people are so excited. We're buying a home, but what are some red flags that potential home buyers?
We need Kelsey to bring up her red
Where's
flag.
the red flag, Kelsey?
Kelsey, red flag, red flag.
All I have is a mask. The black mask.
What are black masks? But that can hurt their process. I mean, give them some tips as to don't do this.
Yes. So the first thing when this is a segue into your question. The first thing when people call me or a realtor calls me and said, I'm not getting any response from this lender. They've already pre-approved them, but now we can't get them to call us back or whatever. And they don't want to come to me for a second opinion because they're going to get their credit pulled again, and their credit score is going to get dinged. That's the phrase, get their credit score dinged. So what they don't realize is now over 6 years ago, the credit bureaus worked into their scoring model, finally something that was common sense. And if you're applying for a mortgage, you can apply to 4 different mortgage companies within a 30-day period, and that first credit score is the only one that counts on your score. That credit pull is the only one that counts. So they could come to me. They've already had the first credit pull. Mine is a no cost, no obligation second opinion to let them know they're getting the best interest rate or not, or they're getting the best service, or they're getting thrown 5 pages of cost sheets instead of a video that explains everything. So it's not just, when you're looking for a lender, you're not just looking for the lowest rate. You're looking for, is this guy going to get me to the finish line and get my family in the house? And there's situations, if you're putting minimum down payment, that the lowest rate is not the best deal. And that sounds weird, but I can show you on paper, and the numbers don't lie. But that's a different story. So some of the things that they don't want to do before or in the middle of a mortgage transaction is they don't want to apply for new credit anywhere. Once I've worked up their pre-approval, that's based on what it looks like that day. So a lot of times they'll get excited, and we have disclosure forms that say don't do this, but they want to go ahead and go to the furniture store.
Yeah. And
when you go to the furniture store, they have a deal for you every time. Every time. And you go in there and you buy $25,000 worth of furniture, but you don't have to make any payments for 2 years. So guess what that is? That is a credit pull from a non-mortgage lender, that is a new debt that we have to calculate. Even though they're not requiring a monthly payment, we have to calculate what that payment's going to be because we know it's coming. Because so we're not going to put you in a house and put you in a bind with student loans that are coming out of deferment or furniture store credit. And then if you don't pay that off in 24 months, that interest from that furniture store retros back to the very first day you applied for it 24 months ago, and they tack that interest on, and then you start making your payments. And people just don't look at the fine print and the fast talk, but that will kill your credit score. It'll kill your debt ratio. The biggest thing that I see, and I have had clients that went ahead and bought something. I had a guy buy a Harley Davidson about 10 years ago, $35,000 Harley Davidson, $389 a month payment. His debt ratio went too high. He could not afford the house anymore. And we were in the middle of the contract. So I guess he's sleeping on that motorcycle under the bridge somewhere. But he got his motorcycle, but he didn't get his house.
Wow.
So that's what I see the most is people 1 month ago or 2 months ago buy a brand new car. They've got a credit pull, and they've got now a $30 or $40 or $50,000 balance of a car and a $600 or $700 or $800. I've seen up to $1,200 a month payments on car loans, and now they've got a brand new shiny car, and instead of the $400,000 house that they were looking at, that car would look really good in the driveway, they can qualify for a $200,000 house.
Wow.
And they're not satisfied with that. So it's just being smart and not being it's really hard because our society has become an impulse purchase society, and we swipe our credit card and we pay for it later. And we're an immediate gratification society. We don't work for it like our grandparents did. We don't work and save for 15 years before we have 20% down to buy a house. It's just different these days, but that's what I see the most. And then the last thing I would say is sometimes you're buying your first home, your parents or your grandparents say, hey, we want to give you a gift and help you buy your first home. So they give you $20,000 or $15,000 or whatever. Don't put that money in your bank because that's what's called a non-payroll deposit. So then we have to prove a paper trail where that money came from. So if they got it out of their coffee can in their safe or whatever, it's cash and it's not traceable. So as far as we're concerned, we don't know if you robbed a bank last night. We don't know if you got a signature loan for $10,000 and now there's another debt out there with a payment on it, and unsecured funds cannot be down payment funds for a mortgage. So you can't get a cash advance from a credit card, for example. So a gift is totally acceptable with the proper paper trail. So what we do is just say, hold on to that gift. And we prompt these conversations so we don't get hit with surprises and this money comes into people's account all of a sudden. So we say, let your grandparents hold on to that money. We'll have them send that money directly to the attorney's office the day before the closing. It doesn't have to go through your account. We don't have to get a new updated statement showing that now you have the money and now here's where you're sending it. It just really, cleans up the transaction as far as the paper trail goes. And we just make a gift letter and let them sign it, and it shows where the money came from, and that's perfectly acceptable. But don't put the money in your bank account before we talk.
Got it. Wow.
That's really
Good
great.
stuff.
All right, there's an ant on my desk. What? This surprised me. What other benefits?
Is that a question? I don't know how to help you with that one.
He's like, I don't see the ant question on here.
That's what I get for having snacks in the office. All right. So can you tell us what other benefits MortgageBanc offers that many other lenders may not?
So the closing guarantee is the number one. I've not run into another lender that guarantees their closing. That pretty much sums it up. We talked a little bit earlier about we're a direct correspondent lender to Fannie Mae and Freddie Mac. So what that does for us to provide to our clients is it provides lower interest rates, it provides quicker turn times, and it provides less paperwork and documentation required. Because when a broker takes their loan and they go through another lender and then they access Fannie Mae, that other lender is going to put, instead of Fannie Mae's minimum requirement, they're going to put an overlay and say, for example, okay, Fannie Mae's lowest score is 600 to qualify, but that lender knows that doesn't perform well, so we're going to say a minimum is 640. And we need 2 years tax returns instead of 1 year tax returns, and we need whatever. So it just saves time and paperwork, and saves money on the interest rate and the overlays.
No middleman.
That's
It
huge.
cuts out the middleman. That's exactly it.
Wow.
Yeah.
All right. So Scott, you've helped a lot of families, and I always love to hear your running total. What do you have any idea where you're at right now as far as how many families you've helped?
Yeah. So the other couple of years ago, when we were in a business group together, Glenna, my number was running around 1,200.
Yeah.
And today I'm up over 1,600, and it keeps counting. So a lot of people in this industry measure their success on how many millions of dollars of loans can I do. And me and my team, we've always focused on families because family is important to me. And so instead of a loan number or a property address, we always talk to the families or the attorneys or the realtors with Mr. Smith or Miss Jones or whoever as a family. So when I serve that many families, that's not saying, hey, look at me. I'm doing so many millions of dollars of business or whatever. If I serve families, we measure units instead of dollars. So that unit is a closing. Well, that unit to me represents a family unit. And then I can't control when they come into my office or online app or whatever, if they're going to buy, if they're first time homeowners and they're buying a $100,000 house, or they're moving to the lake and they're buying the $600,000 house. I can't control that, but I can control the level of service I give to that family. And then if this guy's buying a $100,000 house, 5 years from now, he sells and moves up and he comes back to me. So on the bottom of our business cards, it says our motto is creating clients for life. It's not one and done. It's not donezo, Sarah. When we finish their loan, we're not done. We're their mortgage partner for life.
That's awesome.
That's great.
I've done a lot of family members loan. Oh, sorry. Did I do something wrong?
No, I just want to mention how they can contact Scott, aka Big Daddy.
I think I know where that came from.
We've been hacked.
Somebody hacked our banner.
Man.
No, I didn't see the Big Daddy on your business card, but we want to make sure that we put it out here now.
It's on the back, Sarah. Well, I think I know where that came from.
Okay, so we're gonna wrap this up here, and I want to make sure we get your contact information out there. So if you do want to contact Scott, you can reach him directly at 205-908-6693. And
that's a correction. Actually, it's 6993.
oh boy,
You were so excited about the Big Daddy part.
did I say it wrong, or is it wrong in there?
It's wrong. It's wrong on the screen.
6993.
Yeah, change the banner. Let's run it again.
You got it, Kelsey?
There we go.
There it is.
For our podcast people.
Redo. Get that
205
Yeah, that first number might actually go to a Big Daddy. Want to reach Scott?
Yes.
Want to reach Scott? Let's call him at
There
205
you go.
908 6993. That's 6993. So we have had a great time, and we want to point out that we are not done yet here. Oh gosh, I get that thing off. So I can't do two things at once. I'm trying to get that ticker off and talk. So we're not done yet. Next week, we're going to have a part 2 where we're going to talk about reverse mortgages, because that's another really, really great topic. So we wanted to save some more time for that. So is there anything else that you wanted to cover, or we're going to move into the hot seat?
Well, thank you for segueing into the reverse mortgage. And what I would say is anyone that's on watching or sees this on Facebook later, reverse mortgage is completely different than it used to be. HUD and FHA have come into that program back in 2013 and revamped it. It's fully insured. It's called a non-recourse loan now. So the individual or the family or the heirs do not owe the debt. The property owes the debt. So you never sign over your title and deed. So the key to anyone that would want to tune into that next week is, are you 62 or older, and are you still making a mortgage payment?
Yeah.
That's the two.
Or are your parents?
Yeah.
Yeah.
Or are you trying to help your parents, which I know that pertains to a lot of people too.
Mhm.
Absolutely. Yep.
Come back.
So that's gonna be
I feel like I've been on the hot seat for an hour. What is this?
I know, right?
Got 1 more minute, Scott.
Right.
I'm donezo here.
We're going to take it to another level now. Okay, here's the hot seat.
Oh, I was dancing. Let me get the wheel.
Oh,
Okay, Kelsey's got the wheel. She's going to spin it. Let's see what it lands on.
what it gonna be?
I'm nervous.
Again.
Oh, spin again. We've done this or that like 3 weeks in a row.
Yeah.
It's gonna be this and that again.
Delivering that, and I won't have it.
I won't have it.
Oh, goody. Famous.
We've never done this one before. How exciting.
Okay. I'm excited, and I think, Scott, you're going to be the perfect guest for it. Okay, so in 60 seconds, I'm going to read famous movie quotes, and you have to give me the movie title that it's associated with, okay?
Okay, these are from the 80s, right?
Yeah, they're all 2020, and they're all Disney films.
Nice.
Okay, let me know when you're ready.
I'm ready.
I'm as ready as I can be.
Okay, number 1, I'm going to make him an offer he can't refuse.
Pass.
I see dead people.
Oh, that's the Bruce Willis movie. Do I have to say the title? Sixth Sense.
Got it. If you build it, he will come.
Field of Dreams.
There's no crying in baseball.
The movie with the girls that play baseball.
Got it. League of their own.
That's close enough.
Yeah.
League of Their Own.
Yes. You can't handle the truth.
That is, I know that's Jack Nicholson.
Mm-hmm.
It's not Officer and a Gentleman. It's the other one.
It's close. A Few Good Men.
That's what I said.
Yeah, I knew you did. It was right there. I am serious, and don't call me Shirley.
That sounds like Dumb and Dumber.
The movie Airplane. Do you remember that movie Airplane?
Oh, yes.
Those are kind of hard.
Those were kind of hard. I only knew like 3 of them.
Really?
Yeah.
I need if we do the wheel next week, remind me so I can have a second cup of coffee ready before we do that.
Yes.
Yeah, you gotta build up for the wheel. That's for sure.
Prepared.
Yeah.
Well, and now I'm choked. I can't talk. Scott, we really appreciate you coming on, and I know that it's so much great information for everybody, and they need it before they go buy a house. That's for sure. So we really appreciate it. We had a lot of fun, but we're really excited about next week too. So Want to thank everybody for tuning in. And as always, don't forget about our marketing mix on Tuesday morning at 8. And we'll be back with Scott for part 2 and talking about reverse mortgages next Friday at 8 o'clock. So we will see everybody then.
Yes.
Thank y'all.
See y'all. Thank you for watching. Bye.